Everybody, we're going to start in just a couple of minutes. Let's just give them a couple more minutes for people to log on. We have a few more people that we expect, and we'll get going. Just give us back another 2 or 3 minutes. Thanks. Let's keep an eye on the U.S. markets just opened a minute ago. I'm going to start this up in about another minute or so. Also, read the disclaimer, please. Let's get going. Hey, everybody. Hope everybody's having a good day today. And markets just opened in the U.S. Got a few things to talk about, and want to get through it kind of quickly. I like to make these things short and sweet so that you guys get as much information as you can without wasting a lot of your time. Uh, please read the disclaimer that you see on the screen right now. It's standard forex trading disclaimer. Very, very important. I'm sure you know the details, okay, about the risk involved in forex trading. So let's move on to something. Hang on. Now let's go to let's try this. Let me see. Okay. Okay. Share the new screen. Right. Uh let's get to a couple of things very, very quickly that you got to know when you're dealing with our alerts. Okay. If you have any questions, you can pop them into the question box. I'll try and get to them at the end. If you're still unclear, we will be happy to take email questions after the meeting and respond to you as quickly as possible. As well, this training is being recorded, so we can send this out to you as well as a refresher. If you hear something but don't quite get it and want to see the recording again, or have to leave a little bit early, this is being recorded. We will send you out the recording. Okay. Now, let's just start from basics. Okay. Everybody's heard a little bit about the alerts already. So I want to keep this short and sweet. Okay. The alerts are strictly a starting point. All right. It's very, very important that you know that. Okay. As I said on the last meeting, and I'll say it on every meeting, there is no algorithm out there that's going to send you a trade, a stop, a take profit, where you can just put it on and let it rip and not think about it, not do anything with it, and rely on that algorithm to work for you, and you'll end up being profitable. Okay, clearly in this world, there's no free lunch. We all must realize it at this point in time. And if that algo really does exist out there, nobody's giving it to you for $50 or $100 or $200 a month. Something that you can just let run, manage your risk, make all this money, and never have to do anything. So that just doesn't exist. Let's understand that. It's been our experience here, as well as with our programmer, who, in conjunction with us when we developed this program, his experience has always shown him over the years, as well as us, that some form of human intervention is important to be able to distinguish the really higher probability trades from just so-so trades. So it's very, very important to know, if you want to be successful using our alerts, okay, you need to be prepared to be able to put a little time and work in, and to be able to understand certain things, because there are going to be some decisions that you're going to make, okay, in order to be able to distinguish what we call A trades versus B trades, and C trades. Okay, so it's very, very important. If you're not capable or ready to be able to participate and to learn a little bit, then this program is not for you. It's not to just take these alerts and do them blindly. Okay, there is some little bit of work, not a lot, but there is a little bit of work that needs to be added from your point and from all traders' points, in order to be able to distinguish, the quality of the alert. Now, a couple of things that are very important. Remember, our alerts come out. They don't come out on every chart. Okay. Jay has sent out a list of all the currency pairs and or indexes or metals that we're currently following, where you may get us an alert. Okay. And he'll send that out to you. The other thing that's very important is that all of our alerts come out. They're either 15 minutes or 30 minutes. And what you need to know is, an alert is not just going to pop up at 8:54 in the morning. Okay. Our alerts are triggered. When they trigger, they are triggered at the close of a candle. So what you will notice is that every alert is going to come on that you're going to get is either going to be on the quarter hour, if it's a 15-minute chart, or on the half hour, if it's going to be a 30-minute chart. So unless you're coming up to 8:45, 9 o'clock, you're not going to get alerts just randomly. They're all going to occur because they have to occur based on our algorithm at a candle close. That's part of what determines whether we have an alert or not. It's only going to register at a candle close. So remember, off minutes, you don't have to sit there and sweat. All alerts are going to pop up either on the quarter of an hour, or on a half hour. Okay, so that's very important for you to understand. Okay. uh we've had some questions from people. We say that you need to be able to evaluate and do a little bit more work. Okay. Now, an alert is a starting point, as I told you. Okay, there's a couple of reasons, and I'm going to show you some examples. There's a couple of reasons why you may like the alert exactly when it happens. You may not like the alert at all, or you may say, I like that alert. However, I don't love the price that it's at right now. We're going to show you how to distinguish that, at which point you may wait. Now, when the alert comes out, excuse me 1 second. I got some people I got to let into the room. Sorry. Thank you. Okay. So when an alert comes out, you like to be at your computer, obviously. You want to be able to look at it right away, but you don't have to just panic and alert comes out, run in and do the trade. There is time to evaluate it. It's not necessarily 10 minutes or 15, although there may be. Okay. But what you want to be able to do is get in there, do a little quick evaluation, and then decide if that's a trade that you want to put on or not at that point in time. Your entry may be, even a little bit better than the entry in the alert. Okay, which is great. Your stop loss will never change, but you may get a better entry. All right, which is excellent, because if you get a better entry, then you take profit is going to be even closer. So that's important to know. So don't panic. Alert comes out. You certainly have a couple of minutes, and if the trade gets away from you, and if the price is substantially better or worse for you, as opposed to getting into the trade because it already moved some, be patient and wait. And you know what? And if you miss that trade and it just goes in that direction, so be it. There's going to be another trade right around the corner. Nothing to worry about, nothing to stress over. So you could take a couple of minutes, and if you end up liking the trade, you get in somewhere around the opening price as suggested in the alert, that's fine. You may get a few pips better, you may get a few pips worse. It's really not something to sweat over. So that's really very, very important. Okay. Now, the amount of alerts you're going to get on any given day varies. We don't know. It's our algorithm kicking off certain things, and we don't know. So today, we've only had two alerts so far. Now, keep in mind also we have Canada News coming out at 10 o'clock this morning. So that's something that we're going to be real cognizant of and real careful of as 10 o'clock approaches. And we wouldn't do anything right now on a CAD trade. However, there was a CAD trade earlier this morning, an alert, excuse me, and the alert came out at well, depending on where you are, we're on a 8 cap. This is an 8 cap demo account. It's a prop account, and so this is an 8 cap. 8 cap is 7 hours ahead of the U.S. And so this trade came out at 9 o'clock on the platform, which was 2 o'clock New York time early this morning. Okay, to give you a little basis to take a look at. And we're going to take a quick look at the dollar CAD, and we're going to show you how we evaluated it. Hang on, just so you see. I'm going to make this a little bit bigger so that you can, hang on a second. Oops. Hold on. And let's just make this a little bigger so you can see it. All right. So what did I say? So this came out at platform time was 9 o'clock. By the way, we'll have to show you how these times coordinate. Okay, but suffice it to say that it came out at 9 o'clock, and I'm going to scroll down here to show you 9 o'clock. This is when the trade went off. Okay, right here, and this was a long by Canner at 37.47.6, which you can see the candle opened at. If you look down at the bottom here, yeah, the candle opened at 37. Let me get back to it. Right here, candle opened at 37.47.4. So that's exactly the entry. Your stop loss was at 37.25. So that was down here, right in this area. And your take profit was up here at 37. Um, uh, 76, and we can see how we had already hit it. So what did we see here? And let's take a look at why we liked this trade, even though it was early this morning in New York time. We personally didn't trade it only because we're in New York. We weren't up. Disappointing, but we weren't here. You got to sleep sometimes, and so it happened at 2 o'clock in the morning. Once again, we same here. We don't let anything just auto trade on our own account. So no, we want to be up because we want to evaluate it. But in retrospect, it was just easy to evaluate. So what happened? We had a directional indicator, which we talk about. Okay, right in here. Okay, hang on a second. You'd have to be able to see this area right here. This key line. This was our directional indicator area here to get in. And so what are we looking at? We're looking at okay, what did we have? We had a nice move up yesterday, came down, a nice move up today. All right. See, high yesterday, came down here, uh, close of the day. And then this morning we started a new directional indicator up here. So what are we seeing? So we see, if you look at the 30-minute chart, we see a break higher of this swing area right here, a little bit of a retracement down here. And that's what we like to see. Okay. We like to see if it is a move up, you get your retracement down, all right, where you set a low, and then you continue a move up. This is another A trade. This is what we look at. And the first thing we look at is this particular pattern. And we say we have a directional indicator, came in off of this retracement, an up move, a little retracement. We got our directional indicator trade signal. And we like the fact that this now looks like it could continue higher based on this pattern right here. Okay. And we like the fears. Remember, it's important because we came down, we took out swing high right here, then we retraced, and then we resumed the move up. And we really like that. And if you would have gotten into this trade was an easy take profit because you would have hit your take profit right up here a little while later at 37, 83.6. Okay, and our take profit was 37.76. So this was an easy trade, an easy take profit. Now, looking further, let's just take a look at something. Let's just look at the 4 hour chart also. Okay, because this is important. All right. So what we have in the 4 hour chart, we're looking for, just some confirmation. What else would give us comfort, okay, that this up move is about to resume? Well, we had a low right here. Oops, coming right down. Okay. We're having a nice little move back up. We had a high over there that could be tested. So all we had was a move up on the 4 hour, a retracement, a little consolidation. Okay. Consolidation, start to move up, retracement. Okay. And now we're in a situation where we have a new 4 hour line put in. We have a trend line that was in here. We have a 50 moving average, which we put on here. And so these things gave us some additional comfort that this larger move is in play. And the 30-minute chart, okay, gave us an area to get in. So this was a perfect example of how our directional indicator works. This was an A trade from all accounts, and it played out beautifully. If anybody has any questions about this, all right, either ask us, now if I could get to it, or email us, or rewatch the recording. So let me just do it one more time for you quickly. We had the alert. The alert came out right around here. It came out when the candle closed, like we talked about. Okay, that's when it came out, right on the button. All right, 9 o'clock platform time. So here we are. We have a beautiful directional indicator. We coming off of a retracement of a big move, just a nice little small retracement, not even a big retracement. As a matter of fact, if you put a Fibonacci in on the 4 hour chart and you go here, we come down, and just this move only retraced down to barely the 23.6. That's a very shallow retracement. So when you get a very shallow retracement and you start to move up again, once again, that's an impetus for a continued move higher. So these are the things that we're looking at. This is the 30-minute chart. Okay. Look at, again, the 4 hour chart. And I showed you before things we were looking at. Now, remember, long thing, we had a directional indicator down here. This was last week. Okay. Now, we don't trade off of the 4 hour charts. We just look at it for what we want to do is we're looking at a potential move. The alerts are setting us up for a potential move based on a 15 or a 30-minute chart. But you have to go ahead and look at a longer time period just to see what's ahead of you. All right. Is it realistic? Are you with the trend in the 4 hour chart? That's something that you put on your side if you are. If you're against the trend, you got to know that. If the 4 hour, so this is just as clear as we could be. And we would be out of the trade right now. May go higher. We don't care. We're coming up to 3 weeks ago's high on dollar CAD. This is a 4 hour chart. So this is the high from 3 weeks ago. So we knew getting in down here that we want to be able to get our take profit. Remember, we're not looking to be heroes here. We're not looking to hit grand slam home runs. We're looking to hit solid singles and doubles. Okay. Moderate risk, achievable take profit, risk reward of 1.15 to 1. Get in the trade, get out of the trade. If it should go another 50 points in your direction, it doesn't matter. That's not the game we play. That's not the way we trade. We're here for wins and losses. Okay. Each trade, we want to win a little bit more than we lose on our losing trades. And we want to be right more than 50% of the time. That's all. That's the success here. So we're not looking for 6-to-1 risk reward ratios. We're not looking, for home runs. We're not looking to pick the low forever and then get a big move up. That's not our game. Our game is we're operating on a 15-minute and a 30-minute chart. We want to be in and out of those trades sometime during the next few hours. The only reason why we're looking at the 4 hour chart, because of a directional indicator and a trade alert triggers on a 30 or a 15-minute chart. And that makes sense when you're looking at a 4 hour chart where you're in the same direction. Okay, then that's what moves something to the top of the list as far as being an A trade or what have you. So this is the trade. And now I would be out right here. Now, could this go much higher? Absolutely. Well, first of all, we have in 10 minutes, so we got to be careful because in 10 minutes we have CAD, uh, Bank of Canada statements. So, and regardless, I would be out of the trade before the bounce of Canada. But here was an excellent trade. So right away, you would have been 1 for 1. And this is a trade we absolutely would have done. Now, okay. Then we had an alert that came out earlier this morning. And by the way, some days you may get 10, 12 alerts. Some days you may get 2, 3, 4. Just for your information, our alerts do not run all day. Okay. They run from just for so and I'm going to talk New York time. They run from 10 o'clock New York time at night to 11:30 New York time in the morning. And if it's before that or after that, we don't see alerts. That's not what we're looking for. So we started 10 o'clock at night, New York time, and we ended 11:30 in the morning, New York time. Okay. That's very important that you know. So you may see when you learn how to do this and you start looking around for your own directional indicators, then you may start to see, oh, directional indicator. Well, why didn't I get an alert here? And potentially one of the reasons it's because it's off time when we're not running. Okay, so so this was a dollar CAD trade. This may go a lot higher. You look at the 1 hour chart. Excuse me, the daily chart. We're up here against some highs right here. So I want to be out of my trade. Could this break through and continue running up? Yeah, absolutely. It can do that. But that wasn't my trade. My trade was to get in, to get out, make sure my take profit, I could get out before I had to take out this line. I don't want to have to take out this line to get my take profit. If I would have had to take out this line to get the take profit, that would not have been an A or an A plus trade for me. Okay. It would have dropped it down a little bit, but I had plenty of room in this up move to get back into the 4 hour move. And the 30-minute chart gave me a very good entry to be able to get in and take my profit and be out. And now done. Okay, done. 1 for 1 on the day. That's all you're looking for. Okay. How much money you risk on any individual trade is something that we're going to show you on how to set up. We risk right now, we generally risk at this point 0.25% on every trade. That's it. So you're going to make a quarter or lose a quarter, make a little bit more than a quarter. 0.25% on every trade. You have to you have to be prepared to have losing trades. We're in the game long term. We're not looking to be superheroes. But trust me, if you can risk 0.25% of trade, and when you get really good at this and really know, and you're building your account and your account gets comfortable, okay, when you're doing all of that, then then you can even start to boost it up to I would go even as high as 0.5% on a trade. As soon as you got some comfort level, you know what you're doing, you have some room to play with, especially if you're trading a prop account. Because if you're trading a prop account, you got to be careful at all times about both a daily drawdown as well as a max drawdown. So you got to really be careful about that at all times. But point is that right now we will be 1 for 1. Whatever happens to the dollar CAD from this point forward is really irrelevant to me. The only thing that could potentially happen now with dollar CAD, and maybe I would take a look at it. Okay. If you go back to the 4 hour, we know we're coming into a key area up here as a high. No, right? Look at this. Okay. All right. So clearly we came right into a key area and we're getting a lot of resistance up here. Now, what would I do? The low has already been in for right now. We already had our directional indicator really on the low, which was here. All right. Now, would I do it? I would possibly, well, after the Bank of Canada numbers, I would possibly be on the lookout, possibly be on the lookout for even a short. Just because it's been going up and up and up doesn't mean I wouldn't maybe put on a short. Okay. Even though I just made my money long. Now, what would make me think that? Well, just by thinking at it. I'm going back to a 4 hour chart and I'm saying to myself, we have a key high here from 3 weeks ago. It would make sense that we run into some trouble over here. Could it break through? Absolutely. But it makes sense that the 4 hour chart. See, I would never go long up here at this point. The long trade was down here. Okay. However, and I'm not saying we're going to do it. We're going to watch it. You got Bank of Canada, interest rates, so that could be funky. But I'm looking and I'm saying to myself from the 4 hour chart, wow, look at this key resistance up here. It would make sense to me, right, that this area is going to be a tough area to get through. It could definitely go through it, no question. I don't care. I already made my profits. Now, on the short side, I'm saying, it's very possible it could stay here. Now, if I were to get a directional indicator on a 30-minute chart, let's take a look, which we don't have one here because we just set a new high here, so we're not going to have it there. Look at a 15-minute chart to see if anything may be coming out. Hang on. Once again, no, we had a high, we spiked out, we took out this high. That makes this right now the new high. So we're not close to having a directional indicator yet. All right. And we're going to show you how to anticipate that. So we're not close to having a directional indicator at this point in time. But what I'm looking at is, should a directional indicator form up here? And then I look at the 4 hour and I say, it makes sense, right, that it would stop over here for right now and then retrace. This may give me an entry to go short, okay, with a comfort level that I know I'm at a 4 week high as well. And maybe my 15 or my 30-minute chart, if I get an alert off a directional indicator, is like, okay, you know what? This is an area where it's definitely holding for right now, and there may be a good short opportunity in there. So that was dollar Canada. I hope that makes sense. This was as good a trade, now a great trade long today, nice and easy, never a sweat. And now actually could be looking for a potential short, but we got a ways to go. We got to wait at least on the 30-minute chart. We got to wait for this candle to close, the next candle to close. You got to wait at least an hour and a half before we can potentially have a directional indicator now on this, because this is now the new high. So you got to wait for the next candle to close, which will confirm this. That's in a half hour. Then you need another shorter high. So you're at least an hour and a half away from a potential directional indicator on this trade. However, you keep an eye on it for later on. So that's dollar CAD. Let's take a look at Euro Sterling was the next one that came out, and that one came out at 14:30 platform time. Hang on, Euro Sterling. All right, now let's take a look at this one. Okay, and now take a look. So we had on the Euro Sterling, we now had a sell at 14:30. Now 14:30 was right. Excuse, it's 15:30, 14:30 was right here. Okay, so it was this candle, all right, which opened at 87.21. All right, was a sell signal. Okay, now I'm looking at it, I'm going, well, you know what? We don't really have that directional indicator. What we have here is really kind of a triple top. And if you remember what we talked about the last time, we're looking for a directional indicator, which would look more like, hold on a second, you know, something like this, a directional indicator. Now this is okay, this is gold, okay, which I'm trading, by the way. That's another story. But this is a directional indicator. Okay, going back to Euro Sterling. Okay, this is not a directional indicator. We do have multiple highs butting along the highs of the day, However, we got a triple top, it's not quite as good. So I'm a little leery to go short this trade. Okay, I'm a little leery, and especially when the signal came out. This is an area when the signal came out, it was kind of, we were in this range over here. As you could see, there was a line here. So we had this kind of range that was in there. So to get in short, when I did not love this direction, the trade alert form, but it wasn't the great alert that I like. It wasn't the great directional indicator that we like to look at, where you have a spike in one direction, a come down, a second move up, which is less than the original spike. That's what forms a directional indicator. We want space between the first two lines. We didn't have it here. Okay, we didn't have it here. Now makes it a V trade. Okay, and if you look at the 4 hour chart, once again, puts this on our side. Now, this is interesting. We have a nice move up. We have our what we call our ladder pattern moving up. Now, we don't like to call a directional indicator when you go from one week to the next. Okay. Although it is definitely worth taking notice that we had highs at the end of last week, came down. Okay. Came down, tried to go back up, set a lower high, moved down, another attempt up, can't get through that lower high. So this is telling me, you know what, this could be an area, despite the fact that we have this move and we're above the 50 moving average and above the 200 moving average, might be an area to take a look at as long as I could get in and get a take profit, somewhere down here. But you're working against a lot of contrary things here. See how it came down to the 50 moving average and moved up. So this is the 4 hour chart. So I'm interested, but it's a B trade. Okay, going back and it was on the 30-minute. And I want you to see the difference. Once again, the key, what makes it a B trade? Well, because we didn't have that beautiful directional indicator that we like over here, but we did have multiple highs staying here. Okay. So, if you could have gotten in, and we actually did a small trade, Jay and I, before we got out a little bit early, but when that alert came out, I didn't like it at 87.20. All right. But you had an opportunity up here where we did move up to 87.25, 87.26, which meant that you could have had your take profit in down here. All right. And you could have put the trade on, and we did put the trade on. We got out a little bit early. Um, made a couple of bucks, nothing big. And as you can see, it's working. Okay. We're down into the 15. Okay. 14. Here it comes down. It's working. Okay. If you would have, believe it or not, if you would have waited and got the better entry up here, you already would have been in with a stop above here, and your take profit would already have been hit. Okay. So this was a B trade, but also it works. And we have no problem taking B trades. Okay. But you got to know when you're taking B trade, you want to watch it a little bit more carefully. Maybe you take your profit a little bit earlier, because it's a B trade. Now, there's only two alerts that we had today. And so therefore, I don't want to say I'm anxious, but there's only been two alerts. Maybe these are the best I'm going to get today, and do I want to trade it? And it was still a trade. So an A trade, a B trade, you can do both. Just because it's not an A trade or an A plus trade, all right, it doesn't mean that you don't do it. It could be a B trade, a B plus trade. I don't want to get too. Let's just call them A and B trades. Okay, so you know what? You can do an A trade, you can do a B trade. The A trade is a higher probability. That's all. When you get good at this, what you may want to do, and what you could often do, is when you have an A trade, you can increase your position size. You can increase your risk. When it's a B trade, maybe you cut down on the risk a little bit more. Okay. And say, you know what? I like to trade, but I don't want to risk a full 1/4% on this trade. I only want to risk 1/8% on this trade. Okay, that's all. Very, very simple. So that's how you can monitor it. Now, anybody have any questions? I'm trying to get through this thing pretty quickly. Let's see something. Hang on. Resume. Oops. Hang on. I'll try and let's go to 1 second, guys. Just trying to get back to the meeting. Oh, no, cancel. Hang on a second, guys. Cancel. I can't get to. All right. I don't know why I can't get back to oh, let's try this. Okay. Anyway, I can't for right this second, I can't get back to change the screen or to look to see if there are any questions. I apologize. I don't know where that setting is right now. So uh that's it. That's the trading for today. I showed you two alerts, a great dollar CAD alert that worked out beautifully, a euro sterling sell, which is currently working out or would be working out, which is fine. It was B trade. We'd be up some money. We were in and out a little bit earlier, and that's it. Let me just. Why can't I find? Damn, I don't know why I can't find my Zoom. It's hiding somewhere. I don't know. See this. Try something. Well, I don't know what the problem is. I'm sorry. All right. Well, I hope everybody. Yep. All right. Sorry, I don't know what the problem is. Can't get back to it. So I don't know if there are any questions right this second, but we will email us if you have any questions regarding this. And like I said, everything is being recorded on this tape. So I hope you guys got a good look at that and notice the difference. Let me just do a very quick review, and then we're gonna get off. Okay. So we have the dollar CAD trade. I want you to see it. I'm going to go through it again because it's important that you see the difference between the two alerts. And though even though we like both alerts, okay, it's important that you see the difference. All right. Look at dollar CAD flying through. So we have a beautiful 30-minute chart. We have a great directional indicator. We had already taken out the high from yesterday. Excuse me. This was the high from yesterday. We took out this high from on Monday, took it out on Tuesday. Slight retracement, new directional indicator gives us a great opportunity to get on this trade. This makes sense. Move higher, a small retracement, a new directional indicator. Going long is perfect. When we looked at the 4 hour, just to get some confirmation about what does the 4 hour look like? Okay, to make sure that we don't have a problem. And we're looking at a 4 hour. We're looking at red lines building. We got a trend line down here. We got a 50 moving average over here. We have a nice little move up. Our only consideration is when we were looking at this and we were looking at our trade, we wanted to be in order to take our full take profit before having to take out this line. As you can see, it broke through it. Great. Okay. But we wanted to be in before it and get our take profit before it hit this line. So you have the 4 hour chart with a nice pattern to it. And you had the 30-minute chart with a great pattern to it. Okay. That's what makes an A trade. All right. Now, conversely, you need to say conversely because it's also a reasonable trade. If you go down to euro sterling and now it continues to drop. Okay. So once again, this alert is playing out. We had to take profit here on the original trade of 87.10. And so we're coming really close to our take profit. B trade, though. Okay. Why is it a B trade? This is not our ideal directional indicator right here, like I showed you. So that's ruling out an A trade. This is not a directionally now. It's highs of the day. It's potentially a very good trade. But it's not our beautiful directional indicator. So that's a little negative. Doesn't mean it's not a good trade. And then when you go to the 4 hour chart, you look at it. Okay. Now on the 4 hour chart, we have highs over here. We have the highs over here again today. We tried a high here. We came back. We came down. Tried it again. Couldn't get out of it. Okay. This is a 4 hour chart. Tried it again. Couldn't take it out. So I'm saying to myself, okay, this has a good chance of now moving down. It can't take out this particular line here. So even though this is moving higher, okay, even though it's moving higher, I am on alert that this is an area that's clearly trouble. Let's look at the 30 again. And I say to myself, okay, we have a directional indicator up here. So the 4 hour chart looks decent. Okay, looks decent. Okay, because you have this line here that we can't get out of. Okay, but we are in a little bit of an uptrend here. Okay, so it's decent. It's good. It's not great. It's good. So I would call this a decent sign, a decent area that would hold me in. That's fine. And again, the 30-minute, we don't love the directional indicator. However, it's still a valid trade. It's just a B trade. So when you do this trade, I would risk, let's just say, if we're going to normally risk 0.25% on this trade, I would have adjusted it and risked 0.125. Okay, still a good trade, and honestly, it'll probably come down and hit that take profit. Don't know, but we're certainly getting close enough. Okay. Oh, here's the problem. Okay, I got you. I see what I was missing. I see. My fault. My fault. Okay. No, I don't see any questions. So, all right, I figured that out. Don't see any questions. Okay. So that's it for today, guys. This is being recorded. We'll send it out to you. If you have any questions, feel free to let us know. Okay. Have a great day.